everybody. This is Dan Sheridan. I'm going to talk about a plan for next week, which would be Monday, October 16th. And we're going to talk about two parts of the portfolio. There's three parts of the portfolio I look at. I look at spec, long portfolio, which would be like covered rights, cash secured puts, put credit spreads, more intentionally long positions in stocks or indexes you like over time. And then range bound, that's what we do the most, trading. I won't address spec today. I mean, I think this type of market with the volatility and everything, for those who are good at technicals and spec, I think this is a decent market for that. Long portfolio saying, hey, and we'll look at one position there, just take a look at it, but it's saying, hey, if with the market being down here a bit, especially from, as you look, especially from, over the last month or so, we've hit 45.05. We're a bit lower from there. If you liked SPY or SPX or some certain stocks a month ago, you might like them more now. So we'll talk about a long delta position for your retirement or long portfolio. And then what would I do range bound? And so let's start with the range bound. And again, you look at the market the last month, even though we've had some two-way action, and net, from 45.05 to the current 43.31, you could say, oh, we haven't done that much in a month, but we have. And we've had some bigger moves too, bigger candles, which means there's a big range between the high and the low. And SPX a week ago on Friday, we had a 100-point move, or from the high to the low in there. So this would be like going to the beach with your family, and it's pretty choppy waters, clouds. It just might go in quick and go out. So with this type of market, I'm probably would do more, and especially VIX is out of that. The 3-month range has been like 13 to 18, and recently we've popped up over 19 and 20. So I'd be much more cautious. For range bound trading, I would be maybe 40 to 50% of my normal size. You look at a day like today, Friday the 13th, VIX is up almost 3 points. Well, on a move down 17 in SPX, that doesn't seem right. It doesn't, but it's called Israel, right? And it's called Israel, and it's saying the first week of this stuff, now we have a weekend free. What can happen there? So people are a little nervous right now. So now I wouldn't put any trades on Friday, but coming Monday, what am I looking at? 2 trades in the range bound, and then in the long portfolio. Range bound, I'd be looking at something like this. So this would be a 70-65 butterfly. We're currently at 43.32. I set my short relatively at the money in the calls, 43.35 in the November 17 expiration. Now, when I say I'd be doing this type of butterfly, no 17, same width in the calls Monday, depending on what the market's doing, but whatever, I don't know what the at the money call will be. We could be at 43.50, we could be at 4,300, then I would do that. My long out of the money call would be at 42.65. In the money call would be 42.65. So the distance from my short call to my in the money call is going to be 65 points. It'd be 70 points. I'm sorry, on the downside, 70 points on the downside. On the upside, the distance from my short call to the out of the money call is 65. So the width on the downside, 70, the width on the upside, 65, right? So if you look at that, what does that mean in English? You've got, if we pay for this spread, let's say we pay around 11 bucks, it'd be $1,100. That's your risk. You see that on the downside in blue, 1,100 would be your risk. And the upside, it'd only be 600 because you're narrower on the upside. Now, I like this type of butterfly. You're about a delta short, which is pretty neutral for me. And if we go down on Monday's date, even if we drop 100 points on this thing, right, on Monday's date from where we're currently at, if we go 100 points, no problem. Absolutely no problem, right? And even if we go down to 42.30, that's 100 points, right? So if I set this up 42.30, I'm barely over a delta long. That's 100 points down. So this is like a Sherman tank in the snow. When you get like a 70-65 type thing, a little short delta. And then on the upside, the volatility's VIX will come down, and that'll help us. So again, I do less size, but because of the volatility we're in, I'd want a stronger boat instead of a dinghy in the ocean when things are acting up. So I'd be out November. So Monday, I'd look at November 17, a 70-65, put my short at the money. Now, what would make me not put a trade on Monday? If by the time I go in around lunchtime to put this on, we've moved 1.3% up or down. We're up or down 1 point. I'd wait another day because that's like storm clouds. So that's SPX. Let's go for the long portfolio, people. If you think, and again, you could scale in. No one's going to pick the bottom, but you could scale in, let's say, yeah, so let's look at a covered right. A covered right in SPY, because it's $431, will cost you in the $40,000 range for one. Here, one long diagonal, which is a poor man's covered right, just using options, is going to be $2,300, right? 20 times less. So your yields are going to be better. So on this type of trade, we're at 431. Basically, what I did is I went 100 points out and bought a 405 call, about somewhere between a 75 and 80 delta call, 100 days out, Jan 19, kind of a stock surrogate. And then I went in and sold about a 27, 28 day call, Nov 10, with maybe a 65 delta. So I got much more downside protection. So if you look at, we're at 431.22 in SPY, 431.34. The downside break even on this thing is almost 417. That's 14 points. It's 140 points in SPX. And, there's one roll that I could do here as we start, getting maybe a point or more, point to two under the short strike. I might roll the November 10s down from 425 to 420, which eventually starts moving this into a calendar to a degree. But anyways, I think these are an interesting strategy. I'd much rather do this than a collar in 90% of situations. Unless I thought the market was going to literally collapse. But if you think it's going to collapse, what the heck are you doing in long stock? So anyways, last thing, folks, I just want to let you see a couple live classes starting up next week. We have the new 4-week live online class, Manage the Greeks and the Risk of 0-Day and 1 to 4 day trades for the shorter term trader. This would be a great market to go over this and learn in and go through this. But it's all about risk management. Anybody can do a 0-day trade. It's managing the Greeks and the risk of it. And that's what we're going to stress in this class. And then that starts Monday. And then starting Wednesday, the new conservative plan to make 10% monthly in October 2023. So we'll be focusing in on that. And that goes Tuesdays and Thursdays, the short-term class Mondays and Wednesdays. You can get some information to sign up on our webpage. And if you have any questions, you can email me, dan@sheridanmentoring.com. But we'll see you next week, folks. Thanks. And that's my plan for next week. Thanks.